Hi, this is Sarah in Accountancy, and today we are going to talk about corporation tax and all of the changes that have taken place to corporation tax since the 1st of April 2023. Now, you're going to have to bear with me. I have realised that my writing is just too bad to try and write everything up as I go. So I'm going to talk you through some of this and do some calculations, and we'll see where we get to. But this will really show you some of the things that you do need to think about, especially if you are likely to make, well, two major things. One, if you're likely to make profits greater than £50,000 in the course of your limited company year. And two, what an associated company is and why that could cost you a lot of additional tax. So let's go. First thing to think about is that prior to the 1st of April 2023, there was quite a long period of stability whereby all SME, small, medium sized enterprises who were set up as limited companies paid a flat rate of tax on their profits. So corporation tax, which was set at 19%. Now all that changed from the 1st of April 2023 when the government decided to introduce a main rate of corporation tax of 25%. So they say that most small businesses won't be affected by this because if your profits are less than £50,000, there is what they're calling a small profit rate or small profit threshold. So that means that any profits that you make less than £50,000 will be taxed at 19%. So it's 19% corporation tax as long as you don't make more than £250,000 worth of profit. So then they've got what they call a marginal rate band, and then profits in this band are taxed at a marginal rate, they'll say, of 26.5%. So all the profits between 50,000 and 250,000 taxed 26.5%, meaning that by the time you get to £250,000, this drops to 25%, which is considered the main rate of corporation tax at 25%. So fairly straightforward. Brilliant. Let's work through an example. I've started to write up the example here. So we've got company A that has profits of £200,000. Now last year, it would have attracted corporation tax at 19% on the whole amount, so £38,000 worth of corporation tax. This year, however, you've got the first £50,000 worth of profit that will be taxed at 19%. So that is 9,500 there, and then you've got 150,000 that's actually going to be taxed at 26.5%. So that is 39,750 pounds worth of corporation tax, making a total of 49,250 pounds worth of corporation tax, or an increase in corporation tax for this company of £11,250. Quite a significant increase in their corporation tax. In fact, it's almost 30% increase. So it's not just a 10% increase or a 6% increase that the government would lead you to believe. It's in this instance 29.6%. So let's just call it around 30% increase in this company's corporation tax. So that leads us on to, well, actually, how much more does this company need to make in terms of profit just to stand still? And we'll move on to that calculation in another video. So for now, all I want you to be aware of is that there are changes to corporation tax coming. We're going to look at other elements of this, such as associated companies rules, and as I say, how much more profit you need to make just to stand still in an example like this. But for now, please remember that small profits threshold is £50,000. So any profits under £50,000 will still be taxed at 19%, which is great. Then you've got a marginal rate band of profits between £50,000 and £250,000, where you will pay 26.5% corporation tax, and then it all comes into line at the main rate band, which is on profits greater than £250,000, where you will pay a flat rate then of 25% on all of your profits. Now, in the first year of this new regime, there will be overlap. So for example, if your year end is September rather than March, you will have 6 months of the old regime and then 6 months of the new regime, and everything will be apportioned accordingly. Your accountant will do that for you, but it is something to be aware of. And even if you've got a cyclical business, it will be done on apportionment basis, not on a profit per month basis. Doesn't unfortunately matter how good your MI is, it will still just be apportioned across the months into which regime your profits fall, if that makes sense. So please be aware, please budget accordingly. Know that there will be more tax to pay. If you're a successful, profitable, limited company, there will be more tax to pay than there were previously. Make sure you keep up to date with your numbers and you are able to make timely decisions. We always run a pre-year end tax planning meeting with our profitable companies, so we can look at where they are to date. We can sort of do some forecasts as to what their corporation tax liability is likely to be, and we can implement some strategies to help reduce that profit subject to tax if appropriate. And we always say, don't let the tax tail wag the commercial dog. So you only spend if it's appropriate to do so. But it might be sensible to make some additional pension contributions, for example, especially now that those rates have gone up as well, to reduce your corporation tax just a little bit. So there are things you can do, but you can only do them if you know your numbers and you're ready in advance of your year end. If you need any help on this subject or other subjects relating to your business finances, then please don't hesitate to give us a call, drop us a line, send me a note, leave a comment below. We're always on hand and happy to help, and I do my utmost to answer every single question and comment that people raise, because it's really important. To us it's simple because we do it day in, day out, but just because it's simple does not make it easy, and it's your business, and you do need to understand these numbers that are going to make a massive difference to you. So that's it. Sarah at In Accountancy. I hope you found this useful, and please tune in for many more to come. Bye for now.